Which token is more expensive? Bitcoin or meme coin? You need $10,000s to buy even one Bitcoin, but for meme coin, a fraction of dollar get you a lot of cryptos in meme. This is the first mistake. People look at the price to evaluate cheap and expensive token. In this video, we'll teach you a simple framework to do just that. We're gonna talk about MCAP, market cap, FDV, fully diluted value, and token unlocks. Learning this will help you protect the risk, understand the upside, and make you be more confident in cryptos. Even if you already know this kind of metrics, this video will teach you more how to use it correctly and build confidence in crypto space. Hi, my name is Thanawat. I'm the founder CEO of Tokenomist.ai. Before we move on, I must emphasize that this content is for educational purpose only. None of this is financial advice. All the token mentioned is for illustration purpose. Hope you enjoy the video. There are situations where you buy crypto when you heard a good news, but the price just keep going down. We all been there. We check news, great news. That's the demand to buy token. But actually crypto price move with two things, demand and supply. And most investors neglect to understand the supply side entirely. Valuations help you understand both, and then you can evaluate whether token is cheap or expensive. Learning this will help you adjust based on the market condition accordingly. Crypto valuations is much harder than any asset valuations. In stock market, you have standards, you have regulations like SEC filing, like financial reports that audited by big firms. All the disclosure aim to make sure that investors have the right data and compliance in place to protect all the shareholders. In crypto, it's much different. There is no universal rules, no auditors, and many projects is still early on the business model. So that it's hard for us to find the right financial reports and the metrics that make sense to do valuations. How can we solve that? So we use simple framework that is common among all the crypto space. We call it coin market cap or crypto market cap. This metric is good enough for crypto estimations. You can find this metric across all the places like CoinMarketCap, CoinGecko, Tokenomist. MCAP or market cap. The first metric you should know. MCAP is the common metric to evaluate how big the crypto project is. It's calculated by using current price of the projects multiplied by circling supply. And then you can use this MCAP to justify and compare among all the projects. Similar to the stock market. When you want to understand how big is Apple company compared to Nvidia, you use number of shares multiplied by current stock price. Let's use Bitcoin as an example. Bitcoin has been mined roughly 19.9 million of tokens. We use that numbers multiplied by current price of the Bitcoin and we get 1.8 trillion US dollars. Currently, Bitcoin is the largest project in terms of market cap. To give you a sense of how big Bitcoin is, it's roughly larger than Meta because Meta market cap is 1.6 trillion and Apple roughly bigger than Bitcoin 2 times. We report more deep insight on market cap on Tokenomist platform. You can check out reported market cap, adjusted market cap, and how we come up with the numbers. Each have their own small differences. Use that when you want to get deeper insight. FDV or fully diluted value is another metric that important to know. FDV will use to evaluate futures values of crypto projects. How to calculate it? We use existing price of the token multiplied by maximum supply or future supply of the projects. To understand this metrics more, let's say you are sneaker collectors. You love to invest on collectible shoes in order to hope for like future price appreciation. The company decided to build a new brand of shoes, only 100 limited supply. You trade among all the players in the market $1,000 in price. So the market cap of this particular collections of shoes is 100 pairs times $1,000, 100,000 market cap. Suddenly, the company decided to issue more shoe, produce more shoe to the market, 10 times of it. So that amount of futures shoes to be in the market can dilute your price, making the collections of the shoe drop in values. That's the thinking about demand, supply, and future of the limited shoe coming into the market. Similar to token projects, token can mint out future supply to dilute your values And if you don't know the concept of FDV, you might end up holding tokens that got diluted through time. For Bitcoin as an example, we use current price times 21 million amount of Bitcoin that in the futures can be mined. That's the total FDV of Bitcoin, roughly $1.9 trillion. For learning more about FDV, be sure to check Tokenomist website. We provide methodologies and how to calculate that differently. So let's conclude this sections, market cap and FDV. Market cap will give you a sense of today valuations of crypto projects. FDV will give you a sense of future valuations of crypto projects. When project is new, market cap will be relatively low comparing to FDV. And when the time goes by, market cap will adjust and move to be closer to FDV values. Next, we talk about token unlocks. Token unlock is the event where token got released to the market, either released it to investor, to team, or to other means of mining and airdrops. Big unlock is the event that you can see jump from market cap at low into a bigger market cap suddenly. If the demand doesn't come at that time, price usually fall. Each team communicate token unlocks differently to communication channels like social media, announcement, PDF, website, and some projects do vested and token unlocks using smart contract. Let's understand token unlocks can be good for timing, understand dynamic between stakeholders and token release and how it evolves both supply and demand. You can learn more about token unlocks using our platform, Tokenomist. We provide the best-in-class token unlock trackers for all the important tokens that you should know. Now we learn about market cap, FDV, and token unlocks. Let's see a clear example to understand overview of all the metrics. We use Celestia in this example. You can see the chart. In x-axis is the time, and y-axis is the amount of the token released to the market. At early stage of the projects, the market cap will be quite small, meaning that you have limited amount of token to be traded among traders. When time goes by, you can see big cliff here. We call it cliff unlocks. The market cap jumped significantly after this period of time, making market cap get closer to FDV at the end of the supply charts. If there are not demand to coming with that token jump on the cliff, price usually fall. So it's up to you to waiting the supply charts and the real demand from other mean of the data. But not all unlocks mean price drop. Let's see another example of Solana, because big unlocks doesn't always mean price drop. Solana can deliver demand after cliff unlocks and deliver a price appreciation years after the unlocks. Back in 2021 in this chart, you can see market cap of Solana is roughly only $60 million. After the big unlocks, the market cap jumps 10x. People might think that with this amount of dilutions, price should fall. But if the project team deliver long-term values, now Solana was trading at $70 billion. So you know the supply, but always check balancing between supply and demand as well. The last thing you should take note that each data platform provide you different methodologies of calculation market cap, FDV valuations. For us, we focus on both on-chain and off-chain data and structure it in a way that user can verify the source of truth as well. Cross-checking is important. Information is unlimited from in the space, and projects can choose to report differently from other places. At Tokenomist, we provide all methodologies and verification process to our data. Be sure to check out in the link below to learn more how we craft all the data metrics. If you don't want to buy an overpriced crypto, you need to compare among the tokens. Here's how it works. You use sectors of crypto projects to find relevant crypto and make an investment. Find the one that valuable and cheaper than the real price. Similar as stock market, when you want to make investment into technology company like Google, Facebook, and Nvidia. You heard all the good news, but now you need to compare the market size, right? Sometimes the price is already shooting up, all the great news coming in, and many people already buy that company. But you probably don't compare Coca-Cola with Apple. Coca-Cola should be comparing with Pepsi. Similar to crypto company, if you believe in L1s and crypto chain networks, it makes more sense for you to use market cap to compare between Ethereum, Solana, BNB, and find the best performing L1s. Same with other sectors, GameFi, DeFi, we can use all the same category, derive the supply metrics, and then comparing both demand and supply. With this principle to use sectors as a framework, you now can identify better tokens or better projects to invest in. Tokenomist also provide that sort of tool to make you comparable between token project easier, whether it's going to be demand metrics like buyback, burn, fee, or supply metrics like unlocks and release, all in one place. I'll give you tokenomics vaccine, a 5 important steps to make you a crypto professionals. First, you need to check crypto market cap, FDV. It's an important valuation for today and the futures. Second, check token unlocks. The supply side timing, make sure you keep up with the market time. The third step, check demand. All the good news, all the positive metrics. It's enough to sustain those supply metrics. Fourth, verify number across the platform. Number can be different. There's a lot of methodologies to find that. Be sure to trust the platform you use the information from. And finally, pieces all together, comparing all the metrics within the same sector to identify the best performing asset for you to invest. With this 5-step tokenomist vaccine, you are ahead of most investors in crypto. Now you learn how to protect downside and find real opportunities in crypto space. Thank you for tuning in until the end of the clips. We provide you with a lot of knowledge, and our mission is to teach more about crypto, help you understand risk in the space. Tokenomist was built in that way to make sure that people have more clarity and navigate the space that is risky and still new to the world. We provide a lot of tools in Tokenomist, and be sure to check it out. And if you loved this clip, please sharing around, adding some like, subscribe, and we provide more content on crypto educations and hope you stay safe in cryptos. Thanks guys, have a great one.